Hello traders, welcome back to the channel. This is January with Trading the Charts Pro, and this is one more session of our weekly market analysis where we break down the overall market to see where we're anticipating the market to move into the next upcoming week so that we can lay out a strong game plan for our swing trades and some day trades as the week progresses. All right, so guys, we're going to start off with the NQ, because guys, every time it seems like, all right, the market is going to move up, it's just something else. Like bond yield has just pretty much been putting a very, very hard strain on tech. All right. But, we saw this inverse head and shoulders potential to the upside, right? That's what we're looking to see. Okay, can this thing move higher? But I don't know, guys. It's not looking good right here, right now. All right. So typically, in order for the market to move higher, right, when we have a inverse head and shoulders pattern, the market needs to break out of the neckline, and we can see that right here. This is the neckline. So the market got to this level 1, 2, 3 times, and the market was not able to break out of this level. So are we in a situation right now where this is setting up to be a failed inverse head and shoulders pattern? Potentially. Why? Because we see we broke back above all the short-term EMA, the 10, the 50, and the 20, right? And we were not able to hold that level. Now we got huge sell-off to the downside, right? And when we look at the MACD, MACD did not recover back above the zero line, which means that the momentum is really still somewhat to the negative. We have the histogram rolling over again. So guys, I want to be cautious here. Currently, I've reduced down all of my positions as far as tech goes to just a minimum, where if we get a situation that tech end up pulling back down to this support level, then I can hold what I have in anticipation of this coming back down here, and then maybe we get a W from this level to move back up, right? So that's what I'm looking at as far as the Nasdaq goes right now. I want to be super cautious, guys, because this is just, it's not bullish at the time. It's like super neutral right here, and based on what I'm seeing, there is a probability that we will end up breaking back down here and to the downside. And the reason for that is based on what I'm seeing in the other two index, which is the Dow and the ES. All right, so let's jump on over to the ES and see how that is going to contribute to a potential tech selling off and coming lower. All right, so when we look at the ES S&P 500, we see where this market has bounced, at the retracement level. We run up, we made a new high, right? And right here, the market was just holding for a couple of days. We sold off. Now we're back to the 10 and the 20 EMA. But I don't feel like this sell-off right here is over. There is a probability that we continue rolling down somewhere down here into, the 50 EMA. And then from there, we will see where the market goes. We have to be super cautious at this time, because we've been running high from November. It doesn't mean the market is going to crash and burn, but the market has to take a breather every now and then. And are we up for another breather? We've been running at 1, 2, 3, 4, 5, 6, 7, 8, around 10 days. Very nice up move. So this is very likely that we are going to come back down somewhere into this level. Another thing that is very important as far as technical go, right? So this was a resistance level right here. The market broke out of it. Technically, most times when the market is going to go higher, after we get a breakout of a resistance level, right, we normally see the market break out, pull back, retest, and then continue higher. Now in this case, we just have a pop above the resistance, and then from there the market just pull back down, and we don't know where. We're pretty much in no man's land right now. All right, so let's just watch out with this. Be cautious, guys. Keep some cash in the event that we get a massive rollover, you have cash to go back in and buy things super cheap in anticipation of another move to the upside. All right, let's move on over and look at the YM, see what the YM is telling us. Guys, the YM is really not showing us anything good. We very nice uptrend. We break out of the resistance level here. This was the resistance that we're talking about. Very nice, right? We run up, and up here, guys, we got a reversal candle. So this is like a shooting star candle where, you know, we run up and then we get a reversal, or in this case, this is a reversal, a hammer candle that is setting up to the downside. Today, we got the confirmation that the momentum is going down. So we have to watch the Dow. If you did buy some Dow stocks that are at this level, we've made a very nice run to the upside. Guys, you have to take the profits and add the profit to your capital and wait to get another opportunity when the Dow comes back to this level. You know, there's a probability that we roll over, come to this level, hold as support if we're gonna go higher, and then we get a next leg up. That's typically how the market move. Whenever we break out of a resistance, we pull back, get a test, and then we go higher. But as it is right now, we are still looking to come lower. So be cautious. If we break this support level, it's very likely that we can come back down and test the 50 EMA just like we did here. Right? So that's how I'm feeling about the overall market right now. My main position is cash, with the exception of a few stocks that have pulled back significantly, and now they're holding at their support level. I will take a small position in those, not too heavy. In the event that they do pull back some more, I can add to the position and lower my break even. And those are stocks that I'm anticipating that, given that they have already pulled back already, when the overall market starts pulling back, those are the stocks that typically will be moving in the opposite direction of the market, because when the market was running higher, those stocks were already pulling back. So 9 times out of 10, what happens is when the market pulls back, then those stocks are moving in the opposite direction. Not all stocks correlate 100% with the market. That means not all stocks move exactly how the market is moving, and it's very good to go out there and find some of those so you can be at least riding in something that's going against the trend of the market if you want to be bullish. If you don't want to be bullish, just wait. Take some of these shorts as we start moving back down. So this is a very good place for you to start selling some out of the money call option, as this thing pull back, or this is a good place to take a little bit of a short in anticipation of this thing coming back down. Where would you put your stop? Your stop would be right above this level. So as long as the market doesn't come back up that way, you're good, and you just ride this thing down as it pulls back. All right, one more thing that I want to bring to your attention today is the VIX. And this is very important, guys, because remember, every time the market has reached a all-time high, or when the market is at a all-time high, you will see the VIX at support. And then as the market starts to sell off, you will see a spike in the VIX. All right, so 2 days back, the VIX acted like it was going to break down below the support level, right? And then ever since, we're now bouncing and look like we're about to get another spike right here, right now. So this is something that you have to keep your eyes on to see, do we start getting a huge momentum coming in here where this thing is spiking up, and then this will also mean that we're looking to see the market roll over and come lower. All right, so guys, if you did find some value in this video, hit that thumbs up. Thank you for watching. If you haven't subscribed, please subscribe, turn on your notification bell so that when my next video comes live, you will be one of the first persons to get notified. Thank you for watching. I'll see you guys next time.